What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method we use can be implemented with any company that's traded in the U.S. stock market. Make sure you hit that like button if you enjoy this video. It really helps the channel grow. Thanks to all those who continue to tune in. Really enjoy your company. If you haven't already, make sure you hit that subscribe and notification button as well. That way you're alerted when we release new videos. We do release bonus content from time to time, so make sure you've got those hit. Now, the nightly and weekend video, like tonight's video, we mostly identify triggers and targets for trades ranging from intraday scalps to all the way up to swings and leap trades as well. So if you do want a deeper dive into exactly how we set up our charts, the trading levels, broadening formations, things of that nature, make sure you check out the bonus content on our YouTube page. We do have a couple of videos that dive deeper into that. And if you want a quick PDF, a quick reference PDF for the strat, check out the description of this video. We've got a free PDF in there for you as well. So basically stay with us through the whole video. We go over triggers and targets, but we, analyze all time frames and give them some pretty good insights. So make sure you tune in for the whole show. And with that, let's go ahead and take a look at the agenda for today. We'll go ahead and recap the price action from Tuesday, December 26th. Before we zoom out like we always do and look at the week, month, quarter, and year charts, make sure we have a level set and not too locked in on these small time frames. Then we will zoom back in, check the 4-hour charts for the 4-hour markers, and then we'll set our triggers and targets for the day of Wednesday, September 17th, and we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. So let's go ahead and check out the chart. We always start out with the 5-minute chart just to go over the proven and repeatable strategy that we use at the beginning of the day to not only get into scalping opportunities, but also to get early entries into whatever direction the day may trend. So first things we want to point out are the 4-hour markers. Those are the previous high a day. That's up here at the top of the page, or top of this chart. We've got the overnight high, this light blue dashed line here. Overnight low, the light blue dashed line down here, previous low a day, and the opening print, which is just the first traded price of the day. And you can see we opened basically where Monday's price action ended. And you can see we got this quick little pop up, kind of expected, seeing how overnight went and how the last few days, full trading days of Monday and Friday, we've had some pretty good downside action. So you can see we got the push up, but we encountered the honorable mention level here, last week's low. That's this purple dash line with the small dashes, and encountered some resistance, and we pushed back down, did get a lower low, pushed back up, got a lower high. And then all in this time frame, on the 5-minute and the 15-minute, there was a simultaneous break to the downside, so a lower high. And so we went ahead and entered puts here, basically at the last week's low, basically when price broke below this, below this candle, the previous two up. So that locks us in as a lower high. So when price action went below here, we went ahead and entered. That lined up with the 4-hour trigger to the downside as well. So that triggers the 2-1-2 down strat. And you can see we pushed down and we tagged overnight low basically to the cent. We went ahead and took profit on a majority of our position at that time. You can see we have this 15-minute broadening formation that we poked through this month's flip level. So this was the first traded price of this month of December. And you can see this green dash line here is last month's 50% level as well. So pretty good area of support. Excuse me. We talked about this area in our previous video. Go ahead and check out last night's video if you're not familiar with this level. And so that's why we unloaded I think it was 80% of the position. It was a majority of the position. And you can see we pushed up, got the lower high, but then got the higher low. And as soon as we went 2 up after this higher low, we went ahead and sold the rest of our position there. Took profit. So You know, a little over $1 move to the overnight low, a little right at $1 move where it triggered the higher low back to the upside. So decent gain for us. Again, we had multiple contracts. We were at the money today. We weren't in the money. Wanted to give ourselves a little bit more wiggle room as far as letting the play happen, just because again we've had some pretty good down days on Monday and Friday. So we watched against that. We're tempted to take this higher low with a call. The risk to reward, it was there. However, if we just break out to our multi-grid chart, you can see over here on the right, the QQQ internals, at best they were neutral, and that was the vol QD, but, ADQD breadth was negative. So there was no real reason to jump into any calls at that point. And you can see the rest of the day just basically went sideways, bouncing between last month's or this month's flip level and previous low a day. So just ping-ponging the rest of the day. If you were scalping these, little pops and drops, congratulations to you. I didn't want to stare at the charts that much, but the opportunities were there to make profit both to the downside and upside, in small moves. And again, if you got multiple contracts at the money, in the money, start putting together that profit, you can build up a decent amount of profit during the day. So we only played the one move to the downside, and that was kind of all she wrote. You can see we had this 15-minute downtrend line that we broke through. And again, this is a kind of another reason why we don't put too much weight into a downtrend line by itself. We look for where they intersect with levels of resistance as well. So you can see previous low a day is a level of resistance intraday at least. And you can see how where this hourly downtrend line intersects with that. We had a little bit more of a pullback than here. We approached it. We did reject off of it here once, but we were able to push through it again there. So a little bit more weight at this point. So we'll see what the overnight has. My guess is we might get a little bit of a, I don't want to say a gap up, because it won't be gapping up from where the day opened. I'm sorry, where Tuesday's high was, but it could be a little bit of a gap from where the close was to get us above that downtrend line and level of horizontal level of resistance. A lot of times that's what it takes, but we'll see here tomorrow. So that's what we had from a scalping perspective. Let's go zoom out a little bit here. You can see we made a soft higher low with that first 15-minute candle of the day. Make this a little bit bigger for those on the phone. So this red 3, or this bearish engulfing candle, was the first 15-minute candle of today, and you can see we set a soft higher low there. We didn't draw a trend line to that just because it was a soft higher low, but you can see that we did have that and then created a lower low. So just continuing the downtrend on the 1 hour time frame. On the 4 hour, we didn't even attempt to get a soft higher low, let alone a solid higher low. Let me get a better chart out here for us. Right, you can see how we just push down. No real pop up. Now we did leave ourselves open for a possible 1-2 down combo 2-up reversal tomorrow, Wednesday. That would target not the high of the 1, but the high of the candle to the left of the 1. So decent move back to the upside if that were to trigger. But of course, we've got to get above the high of this 2 down before that actually triggers. So again, got to see what happens overnight in the beginning of the day tomorrow, or Wednesday, depending on when you're watching this video. But we could be at some type of a bottoming or bounce point, at least in the short term right here. So looking for a little bit of upside action tomorrow. Today we went in basically pretty neutral, not knowing what we would have, knowing we had the downside over the past few days, but had the bottom of this 3 to break below before we would probably bounce, and that's what we got here today. Broke just below the bottom of this 3, bouncing off of last month's 50% level and starting to push up. But again, we'll see what happens tomorrow. From the day perspective, again, just another 2 down, but more of a doji here, kind of a hammer, but still a decent sized wick on top. Now the wick on top is smaller than the wick on the bottom, so that it does lean a little bit more bullish than bearish. But the candle's red, meaning we closed below where we opened, and we closed below the previous day's low. So not really anything more bullish to that candle, right? It would be neutral at best, just because of the doji-ish type of formation it has, this single candle alone, but everything else would lean more bearish. So although we would look for some upside tomorrow, and it wouldn't be unexpected, I can still see fading off a little bit tomorrow as well. We've got this gap down here below, as well as the market maker's expected move low level down here. So definitely on the board. If you're not familiar with the market maker's expected move, check out our weekend video where we dive deeper into that. Zoom out a little bit more here and take a look at the week. Let's get a better chart here. And again, we've talked about yesterday how we went 2 down on Monday, locking last weekend as a lower high in the trend count. So we do have a higher low that we came from, but we made a lower high. So at best, this kind of looks like consolidation, where we're pulling back and could kind of just drift sideways. Now, if we continue to drift down and we break this low, now we've got a lower high and a lower low, and we're starting a downtrend back to the downside. So you can see this gap here that could be a magnet, right? If we push through there and we're able to continue to be pulled back, this would probably drift into 2026 by this point, but we'll see if that gap does get closed to continue to pull us down and give us a lower low on the week to week count on the week chart. So want to look out for that. Want to kind of neutralize ourselves. Don't want to be adding anything really long at this point. Now, if we do push back up through the end of the week, or even if we finish with the 2 down this week, if we do go 2 up next week, that marks this as a higher low coming from another higher low. So again, consolidation at worst, I would see there. And at that point, you would start to kind of look and see, okay, do we get a little bit more bullish? Can we go breach this high? If we can get above this 5076 here and make a higher high on the week count, then we'd be back in business. But right now, we're sitting more neutral, bullish leaning in the mid to long term. Short term, definitely, we've got to say bearish because of the price action that we've had. But nothing falling apart from the week chart and up. Speaking of higher time frames, let's look at the month. Now, we were trying to go 2 up on this month to lock last month in as a higher low and continue this uptrend. But again, have yet to breach that. If we get some type of push through the end of the month, end of the year essentially, and breach that last month's high, then we get that 2 up, locking that in as a higher low. But we would want to, like I said, the 5076 is the real level that we want to breach, because even if that, there's still just a little bit of room in there where we could go 2 up, lock this in as a higher low, and then pull back where we never made the higher high. And now we got to look at the next month to see, are we going to pull back further? And are we getting some type of lower high, lower low situation to start some type of downtrend from the month perspective? Again, not calling for that. We don't make predictions on this channel. What we do is make sure that we're ready for price action, whichever way it goes, right? And we'll have our triggers and targets ready like we always do. So continue to watch this. Inverted hammer to a doji essentially at this point, but we are still green, meaning we're above where we opened for the month. So just want to continue to keep that month green and try and push up as much as we can. For the quarter, that play comes into play as well, because now we're starting to threaten being enforced, no longer being enforced on this one combo 2 down, combo 2 up reversal, right? Remember, we triggered that once we went above this 3615 level, right? The magnitude for that move is 7008 up here. We talked about it wasn't going to happen in 1 quarter, maybe not even in 2 quarters, possibly 3 or 4, and we're seeing that develop here, right? We got the bounce, triggered the one combo 2 down, combo 2 up, trying to get up there, broke last year's 50% level, but kind of getting hung up there. So we want to continue to watch that, because if we do continue to push down through the end of the quarter and we open up 2026 and go 2 down in the first quarter of 2026, that mark notches this in as a lower high, and we're coming from a lower low, which would really start to make us think longer term, or at least, for 2026, beginning of 2026, it could look like the beginning of 2025, and we have that pullback because we would get that lower high, and then, could possibly go get a lower low. Can't go too much lower than we did this year, but it is possible. So, we'll continue to see what happens there on the quarter and on the year. Not much more to say than what we've said the last few days, or weeks, I should say, really months at this point. We did trigger this 1-2 up, 2 down on the year this year, but we're able to make this higher low. Let's make this a little easier for people to see. Made this higher low here so far, and continuing to push up, making this more of a hammer candle than anything else. Starting to pull back and get a little bit more wick on the top than I'd like to see, but if we can push up to the end of the year, that would be great, because then we get a good chance of going to from this 2 down to a 2 up, giving a 2 down 2 up reversal in 2026, and the magnitude of that move is at 70.08 again. So again, start a kind of a broken record from the high time frame perspective, but it's kind of a good thing, because that means that we're not breaking down from a high time frame perspective, right? All the downside action is short term. So just want to keep all that in mind while we have these pullbacks, and just remember, it's not the end of the world. We've still got the long term or higher time frame thesis basically intact, and just want to continue to see those stay in force. All right. So let's zoom back in and take a look at the charts for tomorrow. We'll start out with the scalping chart, 5-minute chart, like we do excuse me, at the beginning of the video, and recalling the current day's price action. Let's talk about tomorrow's price action. Let's see, what are we at in after hours? So we've had a pullback in after hours, 50 cents. So that's a pretty decent pullback. It's a little over 1% for SOXL. So let's say we activate this. Let's say we pull back even a little bit more overnight, and we end up opening. Let's get the right tool out here. Let's say the opening print for Wednesday is right here around the overnight low. One thing that we don't talk about too much, but we did talk about it in yesterday's video. This would give us an opportunity for overnight inventory correction, essentially, right? If all the overnight buyers have overnight sellers have sold the price down to this overnight low, and we open there's a good chance that all of those overnight traders will sell at that point and take profit. And a lot of times, we'll see the open in a bounce. But what that does is, gives us a target to shoot for, overnight high, right? That's where we should at least bounce to. But that plays into the, repeatable strategy that we talk about. So we take the opening print and we look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. So if we open here and we push up, reject off our overnight high, and we come back down, but we make a higher low, especially above this 15-minute downtrend line. If we make this higher low above the opening print level, then we want to look to get into calls. First target would be overnight high. Second target would be previous high a day. Depending on where you get in on the call, you may not have a lot of magnitude to get to that overnight high, so it wouldn't make too much sense to sell there. Not getting the profit that you're looking for, and with the repeatable strategy, the next target would be the previous high a day. Now you have to keep in mind, you've got this hourly downtrend level, you've got last week's low. Those are going to act as resistance on the way up. So don't want to get too far ahead of your skis. If we do push up, maybe get a little rejection off of the last week's low, look for a pullback, and then another higher low above overnight high. If we get that higher low above overnight high, maybe you want to add to them at the very least. Stick with it and look to see if we'll get that previous high a day. But just remember that we do have this level of resistance. So maybe if you come here and we start to get some sideways action or even a little bit of pullback, you may sell part of your position to, capture that profit, leave a couple of runners to see if we get that sideways action to continue up, right? As always, look at your internals, QQQ internals, and see where those are headed, and those will help play along. But just like to the downside, if we get a push down, maybe we bounce off of last month's or this month's flip, not too far of a push down, because we've already had a good push down overnight, right? If we push down and then we get a little bit of bounce, and then we get that lower high at or below opening print level, then we want to look to get into puts. Obviously, overnight low would be off the table at that point, so your target would be previous low day, and then obviously there's not a lot of magnitude there. So unload, put some of that position there. This is a major level of support. We talked about this yesterday, and on Friday as well. This is last month's 50% level, so look for some support there. If price does go beyond previous low a day or goes above previous high a day, obviously we have our triggers and targets on the 4-hour time frame, 1-day time frame, things of that nature. So you'll want to roll to those targets at that point. We'll go over those here in a second. But for the proven and repeatable strategy, we look for the opening print, look for higher lows at or above opening print to get into calls, look for lower highs at or below opening print to get into puts. All right. Let's go to the 4-hour time frame to get our look at how things would appear for more of a longer day trade, full day trade, maybe even an overnight swing. Right? We talked about we pushed down that first 4 hour, but we had some positive action in the second half of the day, giving us a 2-1 inside candle is a 1. So there is a clear entry on both the upside and downside, right? The low of the 1 and the high of the 1. And now the exit is going to be, if we go to the downside, you're going to enter at the low of the 1. The exit is going to be previous low a day. That's just to complete the strat, 2-1, 2 down strat. That would complete it. Again, you're running into support here. You can see it with support here, resistance. We turn resistance into support. So is this going to act as support again? Possibly. You'll want to watch that. But from the 4-hour time frame perspective, the strat to the downside is a 2-1, 2 down, not a lot of magnitude. To the upside, we would also have a 2-1, 2 up, a little bit more magnitude there. But again, you're looking at last week's low, so looking at a little bit of resistance. So it wouldn't surprise me to see some sideways action tomorrow. At the same time, if we get this 2-1, 2 up to complete, reach the magnitude of that strat, which is 41.66 or the high of Tuesday, then if we poke above that, then we trigger this 1, 2 down combo, 2 up, and the magnitude is then the high of the candle to the left of the 1. So we're getting back up to where we flip the week green again. And again, tomorrow will be the halfway point of the week, so it's perfectly reasonable for us to push down below the week's opening print and then push back up and finish above the week's opening print by the end of the week. Again, not getting too far ahead of ourselves, but that is what would unfold from a 4-hour time frame. From a 1-day chart perspective, that's the wrong chart. There we go. Right, we had another 2 down, but again, we talked about how there was kind of a doji-ish candle today, still red, so close below where we opened. But if we do get further action to the downside, that's all right. We still got room before we would put in another lower high. Oh no, a lower low. So at some point we would bounce. We got a market makers expected move low down here in the gap, so it's entirely possible for the gap to fill tomorrow. If we do get the gap fill, look for a bounce off of that gap fill level. Again, market makers expected move low is not an end-all be-all level. It doesn't mean price has to bounce there. It just means 70% of the time price stays within this range, right? So look for some support at that level. If we go to the upside tomorrow, we get this 2 down, 2 up reversal, right, triggering at the high of Tuesday. The magnitude for that move would be the high of Monday. Now, if we breach above the high of Monday, that puts us in a combo 2 down, combo 2 up, and we're looking for a magnitude up here, the high of Friday. Do I expect that to happen all in one day tomorrow? Not really. But if we can at least kick off the first 2 down, 2 up, even if we don't make it to magnitude, that gives us a little bit of momentum going into Thursday, which if we go 2 up again, then we've kicked off that combo 2 down, combo 2 up, and then we can continue to work our way back up to Friday's high. Let's go over here to the notes so we can look at just the hard numbers real quick. We talked about, so Wednesday, December 17th is the levels that we're talking about. On Wednesday, there will be 9 trading days left in 2025. Yes, this is the last full trading week of the year. We know that on Tuesday, the close price was 40.49, and we know that we'd have to get up to 43.10 to flip the week back green. We know that the month, quarter, and year are green, but the month is very close to flipping red as well, right? So we definitely want to have those levels here in our notes so we have a quick reference as to when that would happen. Mostly, I don't want to say mostly, but especially for the week, because once we flip back the week back green, that puts us back in full time frame continuity to the upside. We don't have any more clashing of the time frames, and that gives momentum back to the bulls, and you get a lot smoother action, not that choppy action, right? We know that the week's expected move is plus or minus $4.98 from Friday's close price, giving us a range of 46.69 to 36.73. If you're not familiar with that expected move, again, watch that weekend video where we dive deeper into that. Always got to keep track of where our gaps above and gaps below are, especially as we approach this one here coming up. And we talked about on, from a scalping perspective or an early entry perspective into the day's move direction. We look for higher lows at or above opening print to get into calls, and we look for lower highs at or below opening print to get into puts. Right, we talked about on the 4-hour time frame, if we go to the downside in that first 4 hour of Wednesday, that triggers a 212 down at 39.51. Not a large magnitude, right? Just 39.24, but we do have some extended targets listed here for you. To the upside, we talked about initially we would trigger a 212 up at 40.84 with the magnitude of 41.66. Now, if we reach that 41.66 level, that then triggers a 1-2 down combo 2 up, and then we're looking for 42.25 and 43.42. From the day perspective, if we go to the downside, it's just further continuation, triggering at 39.24. We've got some targets listed out here at 37.68, 36.45. That 36.45 is the gap close. And that 36.73 is this week's, the low of the expected move from the market makers for this week. So definitely looking around that 36.45, 36.70, maybe 36 flat level for a bounce if we get one. It doesn't mean we're back to highs. It could just be, what a lot of people call a dead cat bounce or just a relief bounce. But that's a level that I would look for. Now, if we go to the upside on the day, if we breach, Tuesday's high, 41.66, that triggers a 2 down, 2 up with a magnitude of 43.42. Again, pretty large move in the face of a downtrend, but that is there. And if we do continue to go beyond that, we've got some extended targets as well. On the week is red. We triggered a 2 up, 2 down on Monday, immediately essentially. That triggered at 41.06 and had a magnitude of 39.46. Now we closed above that 39.46, but we still reached that intraday, so the target was hit. When that target was hit, that did trigger the 2 up combo 2 down. That magnitude is 39.25, so not a whole lot more to go. I expect that we should probably hit that, and if we do, we've got some extended targets to the downside if we continue to go through, especially through this 36.45, which is that gap close. To pull off a 3 or a bullish engulfing candle in the week, we've got to get all the way back up to 50.09. $10 in 3 days isn't too much for SOXL, so it could still happen. So keep your eyes peeled for that. If we do, remember we want to get that 50.76 because that not only gives us a higher high on the week, but on the month as well. Speaking of the month, we're still inside. Got to get all the way down to 28.12 to trigger 2 down. So don't expect that really to happen this month. Stranger things have happened, but I don't expect that to happen. And then again, to go 2 up on the month, we got to get to that 50.19. So obviously a lot closer to that trigger. And if we do, the magnitude is that 50.76, which again, we want to reach because again, that's the higher high on the week as well as the month. And, continues the uptrend on the month, locking last month, November, in as a higher low. On the quarter, we're in that 1 combo 2 down, combo 2 up, want to stay above 36.15. And on the year, we've reversed this 1 2 down, 2 up, 2 down, making a higher low. And, a green candle right now, hammerish structure, a little bit more wick on top than we would like, but plenty more wick on the bottom than there is on top. So just looking to continue to see that push up through the end of the year, because if we get that 2 up at the beginning of next year, that gives us, the whole rest of the year to reach the magnitude of the 2 down, 2 up, which is that 70.08. Again, that's the magnitude for the strat on the quarter as well. So 70.08 seems to be that magical number that we're trying to reach. But until then, here are the triggers and targets in both directions for everything from a scalping perspective all the way up through that 1-year chart. Hope everybody enjoyed today's video. We tried to cram in as much information as possible without taking up too much of your time, so we hope you enjoyed it. If you made it this far, go ahead and give us a thumbs up. It's free, but it really helps the channel grow. We're trying to put out as much free information as possible, so I just hope that you could return in kind with a free thumbs up. But anyways, we'll go ahead and wrap up the video like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow. If you're watching this Wednesday morning, we hope you got some good rest last night and woke up refreshed this morning. And we look forward to getting out there and trading with you.